Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Bitcoin's price action is being dictated by corporate balance sheets, not just spot demand. Strategy announced a massive $1.5 billion convertible bond repurchase. This move signals a decisive pivot toward debt control. The company aims to reduce leverage significantly. This strategic retreat from high-cost debt alters the risk profile for its Bitcoin reserves. Investors are watching closely to see if this deleveraging stabilizes the asset or signals underlying financial stress. The market impact on BTC remains ambiguous, but the reduction in dilution risk is a clear bullish signal for long-term holders. Meanwhile, trade tensions are cooling in the agricultural sector. U.S. Agriculture Secretary Rollins confirmed that beef exports will resume to 17 Chinese provinces. This is a tangible victory in broader U.S.-China trade talks. The immediate financial impact is substantial. Ranchers can now add $165 per head to their margins. This price floor provides critical support for U.S. livestock futures. It also serves as a diplomatic olive branch, suggesting that geopolitical friction may be easing in specific commodity corridors. On the macro front, European markets are repricing geopolitical risk. The DAX fell 2.1% as unrest in Berlin deepened. German police clashed with Nakba anniversary protesters, adding a fresh layer of instability to the Eurozone. This unrest compounds existing economic headwinds, forcing investors to demand a higher risk premium for European assets. The DAX's decline reflects a broader loss of confidence in the region's stability. In related news, Russian equities remained flat despite a surge in energy prices. The MOEX index closed at 0% change, decoupling from its primary export driver. WTI crude jumped 4.2% to $105.42, fueled by tensions with Iran. However, domestic pressures weighed on local stocks. Magnet hit 5-year lows, highlighting the disconnect between global commodity prices and local corporate earnings. The oil surge benefits the state, but not necessarily the listed companies. Looking ahead to today's release, China's economic data will set the tone for global growth expectations. At 2 o'clock Universal Time Coordinated, industrial production is forecast at 5.5%, down from 5.7%. Retail sales are expected to rise 2.2%, up from 1.7%. This divergence is critical. If industrial output slows while consumption holds, it suggests a fragile recovery. The market will scrutinize these numbers for signs of deflationary pressure or renewed stimulus needs. Simultaneously, the UK faces a sovereign debt crisis. The 10-year gilt yield surged to an 18-year high, breaching 5.16%. This spike reflects deep concerns about Britain's fiscal health. Global fixed-income investors are demanding higher compensation for holding British debt. This trend puts pressure on the Bank of England and could trigger a broader sell-off in sterling. The combination of weak Chinese data and strong UK yields creates a volatile backdrop for global capital flows. Investors must navigate these conflicting signals carefully. That's your market briefing. Follow Rumour with AI for daily market intelligence.